Hi, it's Dave. In this video, I chat with my friend Emmet Peppers, who I had on the show a few weeks ago. He's had an incredible year growing his portfolio to over $30 million. I'll link to the original conversation in the video description. However, in this video, I want to dive into details of a real-time trade that Emmet put on last week. He bet almost $3 million on a short-term option play where he could easily lose all of it. It's kind of crazy in some ways, but I wanted to know more details. I hope you enjoy this chat. All right, here we are joined by Emmet Peppers. In my last interview with Emmet, we talked about how he went from about $1 million last year in 2019, and he had a breakout year personally this year, having his portfolio go to over $30 million, probably closer to 40. And I wanted to bring Emmet on again to my show and talk about this trade that he's put on. And I wanted to kind of dive into the details. Last interview is kind of more of an overview of lots of different things, but this show I want to kind of dive into one specific trade that Emmet is doing right now. Dive into your psychology, dive into kind of your thesis, dive into the emotional part of it and some strategy, and just kind of, it's mostly a learning experience for me. I just want to learn what's going on in your head and how you approach things. I hope it'll be a learning experience for others. And yeah, so welcome, Emmet.
Thanks. Yeah. Thanks, Dave. Yeah. When we last talked, I think we mentioned how I was really looking forward to the S&P 500 inclusion event, and how that I thought would be a potentially huge opportunity for Tesla shares to rise, significantly. And I guess just this past Monday night is when they made their announcement. It sort of surprised. I think it caught a lot of people off guard, wouldn't you say?
Yeah, I mean that was yeah, I mean I knew it was coming sometime, but like I think most people just kind of given up for, the expectation, of when. So yeah, it was surprising. I mean, I gave like a live stream and I was just like, wow, this is like amazing. Tesla has finally, made the S&P
Yeah.
500. They've been finally recognized, and accepted as one of the large cap companies. It's just like, it seems like an era is over, with
hmm
Tesla, kind of the early stages, the struggling stages of this like scrappy startup has transitioned into this now kind of mega cap company. And it seems like maybe the transition is almost like fully, complete in a sense with the whole S&P 500, this year. Yeah, so I was curious about this trade. So I remember we were chatting over this past week and you're like, after the inclusion announcement, you're like, whoa, this is crazy. And you're really bullish personally on what the stock price could do.
hmm
So you went ahead and you're saying how I remember that night before the market opened, you're like, hey, I think I might make a trade. So what was going
hmm
on kind of through your head, right after the
Yeah.
inclusion and that evening?
Yeah. So naturally, you and I are huge Tesla bulls, so I knew I'd be naturally super excited anyway. So I'm trying to like be conscious of that and counter that with realism, like realistic thinking, not being overly optimistic. But even having that mindset, I still felt like the way the S&P announced it, even with the potential, a month ahead of time and potentially over two different weeks and asking for investment advice from advisors, I felt that was a way to cover their own butt, cover their own ass in case the stock like goes up ridiculously high and people try to complain like, hey, you guys waited too long, you let this happen. Well, at least now they can cover their butts with, hey, we reached out to ask for advice even, and we did the best we could. So I just felt like the S&P committee was almost giving information a tell there that like they even think this is going to create a potential squeeze in the stock, right? They know this as well as anyone, I think. And so also studying the potential S&P inclusion trade since this past summer or spring, or even before we started talking about it, I think, for at least a year now, the possibilities, right? And so you just know there's, 100 and something million shares that have to be bought by the index funds. They have marching orders, especially to just like, okay, you have to buy 120 million shares or whatever the number is by this date. You have no choice. You have to do it, right? And that's a lot of shares of Tesla, right? And that's like, I think, 50 or $60 billion worth of Tesla. And I just don't think the liquidity is available. There's so many super bulls like me and you, and even institutional shareholders like Ron Barron. We're not selling. ARK Investments, they're not selling a major piece of their position. We're holding till trillions of dollars of market cap, or until all the best products are being released and robo taxis and all that. So to me, it just seems like the opportunity for the stock to rise very, very significantly is there. And I was looking at the options, and the night the S&P inclusion happened, I think the stock closed. Where did it close? It was like $400, and then after hours it went up to 450, I think, right? Something like that. Is that
Yeah, I
right,
think
Dave?
yeah, it was somewhere around 400, and then after hours it went up to 465, I think.
Yeah. So I was looking at the options prices, and I was thinking, okay, where do I think it could go by, the end of the month of December? And I thought this thing could go to 1,000. Like, it might not, it's not probable, but I think like there's a 20 to 25% chance this thing's going to double, or more potentially. And that's a big chance that that could happen in my mind. And so I looked at the 700, like for some reason I looked at the 700 strike calls for January 15th of 2021. Those seem like a good pick that I could do the math on. And they closed that evening at $2.50 a contract. But I knew based on the delta, there's all these options things that it would open between $5 and $10 per contract the next morning based on the $50 price increase and the increase in implied volatility most likely. So I thought about, okay, if this thing's around $7 a contract, then the math I did was, okay, if the price goes to, $800 or $900, then that's like a, 10, 20, that's like a 20 plus return on my trade, 20x return. If I think it's a 20 or 25% chance of happening, then that's like a very irresponsible of me not to take that trade with some portion of my assets, not a lot of it. I don't want to risk, a large portion of my money on a 20 to 25% chance. But if I can risk 5 or 10% of my assets on this, what I think is a 20% chance to get a 20x return, I would definitely do it. Right. And
Hmm.
so that's sort of what I did. I
Hmm.
just did the math and said, okay, I'm going to buy X number of contracts and execute them in the morning, just the next morning, Tuesday morning, the best way I can, because I wasn't sure if the price was going to keep going up or not right away.
I'm wondering, so what do you think about the kind of a few things? First, there's that whole argument, and the S&P 500 actually put it in their press release how Tesla is a very highly liquid stock, right? It's there's a lot of trading volumes. I think the average what volume per day is like 50 million shares or something, right? So let's say hypothetically, there's 20 trading days left. Let's say after when they announced around before it's included, then let's say people, institutions only need to buy 5 to 10 million shares per day, right? And they can fill the 120 or whatever million shares they're required to buy. Um, so, having buyers buy 5 to 10 million shares per day, over 20 days, it seems like a reasonable thing. Um,
hmm
so
I
why would you think that buying just let's say 5 to 10 million shares out of 50 million? So let's say that's a 10 to 20% of institutions buying. Why would you think that would cause a big spike? Is it because of you think the vast majority of those that volume is just high frequency trading, algos is trading. There's not really
yes,
that much real buying going on. Is
that's
that
right.
basically the thing?
That's my belief. I think the advent of high frequency trading over the last 10 or 20 years has changed that average trading volume to be sort of an unrealistic number. It just, you don't know if 80% or 90% or 50% of that volume is just high frequency trades going back and forth with each other, trying to trick real buyers and real sellers.
Mm-hmm.
Um, so my guess with a stock like Tesla, which is probably the most speculated stock, not just for the algos, but even day traders that are, still around. I'm sure they're day trading the heck out of that thing. And those are people that are buying a stock and selling it in the same day. So their net position is zero going into the day, net position zero going out. And so I just think the average trading volume of Tesla, the true volume of actual net shares being bought and sold, is much, much lower than what that number shows. So That's just my feeling. I've been in the business with, interactive brokers, looking at the back end of trades, and they were sort of the inventor of high frequency trading, so to speak, way back when their market making division, Timber Hill, was started and such. So I think that's a big misnomer, that people think, they look at those NASDAQ puts out their short report every 2 weeks, and they're like, oh, it's only 2 days of or 3 days of trading volume, or a day and a half of trading volume to close the shorts, right? And I think that's just a real misleading statistic.
Yeah. I mean, okay, so let's go a little bit deeper into this because I think it's actually quite interesting. Um, so let's like back, what is it, a couple months ago when Tesla raised their $5 billion, like, super fast. They announced their offering, or that they could sell their stock at any moment, and then within like a week, right, they said we finished, right, our trading. And so for $5 billion, let's say, roughly 10 million shares or something, 10 million times, $500, whatever, 5 billion. Sure, it's a little bit less than that, but for the sake of, this argument here.
Hmm.
So they were able to sell 10 million shares within a week. And I guess we did see some weakness, right, when they announced it. But the stock didn't crash, to the floor per se. I'm wondering, like, can institutions really buy 10 million shares out of the 50 million that's there traded every day for 20 days, like, without like a huge run up? I mean, can it be just like ending up, between $500 or $600, stock at the end of that
Yeah.
run up? Or like, are you looking at it as like everyone's going to pile on, like everyone's going to, like the traders and the
Yeah.
the funds and all these people are just going to, like, write it up, make it harder for the institutions, right, to buy the
Yeah.
required shares, and therefore you get this kind of exaggerated move up. Is that kind of what you're thinking?
Yeah. I mean, I think what the first thing you said is more probable. But I think the run up, there's a realistic possibility, whether it's, in my mind, 20 or 25%, somewhere in that range. You have to flip a coin heads twice in a row to get that kind of outcome, right? So it's not probable, but the fact that it's a significant outcome like that, and it seems like you can get a 20x return, seems like a no-brainer to me to make that bet.
Okay.
So that's how I thought of it.
Got it. So you're doing kind of in a way, a double bet, in my opinion. It's like, okay, first you're saying you think that there could be a run up because, and you're not saying the percentages are per se super high, but you're saying that, there's a good chance. Let's say, I don't know what those possibilities are, but some type of run up. Maybe you're saying, oh, above 50%, this thing goes above $500 per share, right?
Yeah.
Um, and then you're saying there's another kind of bet you're making, which is as it runs up, you're thinking it could do a super run up in a way. Like it could really
Yes.
go
Yeah.
past, like 600, 700, up to 800 or something, right?
Like a massive short squeeze, but it's not a short
Exactly.
squeeze. It's indexers forced to buy it. Yeah.
Got it. So you're betting on not just a run up, but a super run up, but you're saying that's still just like a 20% or so,
In my mind,
yeah,
I'm
possibility.
countering it. And I really think it's like a 50% or 60 or 70, but
Mm,
that's just my overly optimistic bull Tesla
mm,
nature, I think. So
yeah.
I'm trying to counter that and be conservative and say, okay, if I wasn't a Tesla bull and I'm just looking at, the market and this, what I know about trading, or, the fun, the mechanics of supply and demand,
Yeah.
that's basically what it is. And I'm going to put it at 20 or 25%. Yeah.
Okay. So here's another kind of angle or thing I want to ask you about. How about this whole run up though that we've seen over the past year with Tesla? I mean, Tesla's done like a 10x already,
Yeah.
right? And
Yeah.
so when you're
Yeah.
betting it, I mean, you're doing this interesting bet. You're saying, okay, it's the stock has run up 10 times over the past, year and a half, and yet you still think there's a chance that it could even double, right? There's a 20% chance, wherever from 400, right? Let's say to 800.
Mhm.
Like, doesn't that run up, like a 10x going into this whole thing, kind of reduce the likelihood or the chances of a massive run up happening because it's already kind of, perhaps people are still digesting, this the valuation change, right? They're still getting used to, acclimated, right? toward the idea of Tesla at $400 billion. So,
Absolutely.
did you weigh that also into everything?
Yeah, I weighed that, and that's part of the reason why. Again, I think it's more. It's not, already over 50%. It's more like 20 or 25. But I do think the run up in the Tesla was long overdue. It was range bound for so long. I felt artificially kind of suppressed, and it finally, I feel like, just kind of caught up to a valuation it should have been on track for from the beginning. So I kind of discount the last run up as like, okay, now we've sort of caught up to where we should be,
Hmm.
and I think this new event could put more of an Amazon type psychology onto the Tesla stock. Amazon stock was always insanely high, and people always wondered, that's ridiculous. Why is it so high? But it was part of the S&P, and people had to, it was just one of those stocks that eventually has grown into its valuation somewhat, right? And so I think we're going to see something similar maybe with Tesla.
Hmm. Okay, I wanted to do another angle here. So, if the stock hypothetically, let's say it meets your 20% whatever, super breakout scenario here, and it goes up to 800, like we're talking about Tesla. I mean, that's like probably $750 billion market cap company. I mean, we're talking about Tesla. I mean, this was like a $50 billion market cap company,
Yeah,
like what,
yeah,
February or March of 2019, not too long ago, right? A little bit over a year.
yeah, yeah.
And now you're making a bet that Tesla could be like a 715 billion dollar market cap. I mean, isn't it kind of too early for that? I mean, like, wouldn't like there be a lot of people betting against the company, meaning the number of shorts would rise, people buying put options, just funds like kind of betting the, let's say, the reverse. So let's say it goes up high and then people just like, bet against it, especially after, December,
Yeah,
the
there'll still be people betting against it for sure, but on this type of scale, like you need a lot of people betting against it to really change it now. It's not a $4 billion company anymore where just like a few hedge funds, could go short on it and manipulate, not manipulate, but put pressure on the stock price, right? Now it's 400 billion, right? Like who's going to put billions of dollars on the line shorting Tesla? Like these hedge funds, they might go short, 1 or 2%. They usually have rules not to go more than like 5% of their book short, right? So, and even that seems like aggressive for Tesla given its history, right? So you might have some people like Chanos or someone, but I don't even think he manages all that much money anymore. He has a lot of followers or disciples, so to speak, but I don't think any of them manage that much money these days. So I just don't think there's enough shorts out there to really put any significant pressure. Like it's so big now, it's just kind of a runaway train at this point. And the other thing with S&P 500 that's huge, that is sort of hard to define, is the closet indexers or the funds that benchmark themselves to the index and pretty much follow almost exactly what the index is doing. Maybe they weight a few things differently, but that's trillions of dollars of assets too. And now all those managers, they have to decide, they have to look into Tesla and decide, are we going to go long 1% of Tesla too, or are we going to in fact say no? And that's sort of like synthetically shorting it, sort of speaking, right? Because they're actively deciding not to buy Tesla when they're buying the rest of the index, right? So I don't think they want that kind of risk on their performance either. So they're not going to short it, but some percentage of them won't buy it. But I think that's going to be a small percentage, and so a lot of these benchmarked funds and portfolio managers are going to start buying 1% of Tesla too, and so that sort of plays into my mind on this super run up too. So there's just so much demand for Tesla stock and so little supply that I just don't. I see a real squeeze here possibility, and so I
Mhm.
just that's what I think. I
Got it.
mean, there's lots of people that have put more metrics and numbers
Mhm.
on it on Twitter and in the
Yeah,
Tesla Motors Club forums that I've read and you've read. And it just
yeah,
makes a lot of sense to me.
yeah. I mean, yeah. So supposedly, like, what it's like, 5.5, is it trillion? Well,
Trillion. Yeah.
um, yeah. It's like, wait, um, yeah. I guess worth of index funds, right? Um,
Mm-hmm.
are indexed to the S&P 500. Um, and then you have like about 7 trillion or more that are benchmarked. So they have a little bit
Yeah.
more flexibility, but how much do they really want to deviate, right, from the S&P
Yeah.
500?
And they
So,
haven't bought Tesla yet, right?
yeah.
Most of those benchmark, according to that Goldman Sachs survey that just came out, for example, they just surveyed like 90% of the 150 they surveyed that are benchmarked, they didn't own Tesla yet, right? So now you have those benchmark funds that have to actively decide,
Hmm.
right?
Yeah. So, okay, here's another angle here. So, what do you think about, like, some of this stuff, like the more it is in a way anticipated in terms of, for example, S&P 500 inclusion for Tesla, like this has been anticipated all year by, the investment community. Don't you think big money funds, S&P 500, all this stuff with all these connections, things we don't know about as a retail
Yes.
investors, don't you think these people would have figured something out in terms of like something behind the scenes, like, like to somehow I want to say manipulate, but somehow control the stock price in some ways.
Hmm.
Like I
Hmm.
noticed, like sometimes with big stock offerings, like these banks have. It seems like they have a way to somehow, like control the stock price a bit, like make it less volatile, during
Yeah.
the stock offerings. And I'm just thinking, like, hey, this is a highly anticipated event. Do you think there's anything like that could be going on behind the scenes, like even before the announcement or even after, just something to massively cut down the volatility, right? Because this is like one of
Yeah.
the biggest additions to the S&P 500 ever.
Yeah. So I know there's a lot of funds out there or people that have specialized strategies of some type of arbitrage or front running these S&P announcements and I think that's been going on already with Tesla, right? And that goes on with most names that get included in the S&P 500. So there's all these statistics out that like, studies done when once companies are now already announced to be included, it's sort of like already priced in from that. But all those other companies that are announced to be in the S&P 500, they're not 400 billion, they're not 1% weightings. They're like 0.01% weightings or 0.05% weightings. They're nothing close to as big as Tesla's 1.2%. Maybe by the time December 21st rolls around, maybe it's 1.5% or more. Who knows, right? It could be, and it's just like a snowball effect. So the amount of shares, the amount of capital required to kind of, sort of legally front run the S&P inclusion event is just so much more than I think the amount of niche players out there that do that type of thing, right? I mean, investment bank might dedicate $1 billion of assets to do it or whatever it is. It's not going to be 6 or 10 billion. Altogether, I think it might be a few billion or maybe 10 billion. I don't know, but it's going to need to be 60 plus billion, 60 billion just for the index funds. And then they have, obviously they must have some kind of formula for figuring out how many of the benchmarked funds that are not index funds also have to buy Tesla or will buy Tesla, right? So there's nothing close in my mind that I think that these potential tactics can cover in terms of assets needed to front run it and smooth out the price action for this.
Hmm. Got it. Yeah, it's interesting because like um, it's I mean that's a clear thesis hypothesis. There's always probably a possibility that something is going on, that we don't know about, and it's
Absolutely.
definitely
Yeah.
probably a risk factor, that who knows, maybe the big super run up is somehow you know the air is let out by some reason, something off market, huge, massive contracts or trades or something happening that people aren't aware of perhaps. Yeah, so I'm curious, with your trade. So you heard the S&P 500 announcement. You're like, hey, I want to get into these 700 strike calls. And what did you do the next morning? Like, what was kind of
Yeah.
the whole process?
Well, I was super excited that night, and it was like hard to go to sleep. But I knew like, okay, I'm not deciding yet. I want to do these 700 strike calls, but I know I'm super excited. I need to get a good night's sleep, so I went to bed at a decent time. But I set my alarm to wake up a little earlier than normal, so I can kind of get my bearings and research the stock action in the morning and so forth. And so when I woke up, normally when I wake up, I might be like more conservative, right? In the first thing in the morning, like, oh, Emmett, you're just thinking crazy last night. Don't do that trade. So, but this time when I woke up in the morning, I was like, that trade does seem a little crazy, risky, but I would be the thought that came to my mind is I would be almost irresponsible not to do it in my mind, just from what I know, just to risk 5 or 10% of my assets on this trade. This is my style. This is how I do things, right? So this is as good of an opportunity as any. And instead of taking 1 or 2 years to play out like leaps do, this takes 1 or 2 months to play out. Like it's such an obvious trade to me, you know? So I went ahead and researched the strikes. Saw the stock was trading around 450 or 460 that morning. And the option was gonna open around $7 or $8, I thought, and per contract. And so my account is with Interactive Brokers. I called them and a little bit before the market opened, and I got in touch with they have a block trading desk for options trading. And so if I just was trading 100 contracts or 200 contracts, I could do it myself electronically, right? But now my account's a lot bigger, and if I'm going to trade 1,000+ contracts, that's not as easy to get filled electronically just trading unless I'm using some fancy algo. And I wanted to get some assistance from someone who's like a professional, and it's more expensive commission wise, but to me that's such a small price compared to the importance of this trade and getting the right execution. So yeah, they helped me. I explained the trade to them, and they helped manage the trade and filled it and gave me callbacks every 15 minutes for the 45 minutes or so it took for them to fill the whole order across my 3 accounts that I was doing it on. And yeah, I got filled between like 550 and $7.85 in that range in the first 45 minutes of trading, I'd say.
Mm-hmm. Got it. Yeah. So, I mean, you sent me some screenshots of, the trades and the account. So, basically you had what, 3,700, 500, wait, 3,750 contracts,
Yeah,
all of the January 15, 2021, 700 strike calls, right?
that's right.
And the total, it seemed to work out to about around $2.7 million.
Yeah, 2.7 or 2.8, somewhere in
Okay.
that range.
Got
Yeah,
it.
2.7 something. Yeah.
Okay. Got it. So you spent $2.7 million on these out of the money, right? Option
Deep out of the
calls,
money.
deep out of the
Yeah.
money, right? Tesla's
Yeah.
what?
Seems crazy. Sounds
Yeah,
crazy.
yeah.
Yeah.
Tesla's like, what? I think it opened at around 455-ish or something. Um, so we're talking about like massively out of the money, right? 250
Yeah.
bucks out of the money and
Yeah.
expiring in less than 2 months, right?
Yeah.
So short term, option calls. Um, so,
There was a couple extra bonuses or positive things that talked me into this as well, like advantages to that particular strike and month, and also my personal account. I've done very well, but I have like, a million or 2 million of short-term gain. So I figured, okay, if I lose this entire bet on my short-term account, it's almost half off because then it crosses out my 1 or 2 million short-term gains this year with the short-term loss on this trade. So it's almost less expensive to me in a little bit in that when I think of it that way, right? And then my IRA and my fund account, I did it as well. But I thought about, because it expires January 15th and not like the last week of December, then it gives me some optionality around taxes for the personal account and the fund account, where I could sell them December 30th or 31st or whatever, or I could sell them January 1st or 2nd, or I could maybe wait until after the P&D the purchase and delivery announcement on January 3rd or 4th or whenever it happens. So there's a lot of optionality around this.
okay.
Anyway, so.
Yeah, it makes sense. All right. So I want to explain a little bit about these option calls for people, because a lot of people will understand it, a lot of people won't. So basically, these 700 strike calls are giving you the contract or the ability, the right to purchase Tesla shares at $700 on January 15th, 2021, or before that price or that date. And so you pay a premium, a contract premium for that right to purchase those shares at that price at a later date. And that premium is basically comes out to be, with the 700 strike calls that expire January 15th, 2021, the premium was, let's call it $7 or so, right?
Mm-hmm.
Per share, right? But then these options, they work in contracts. Each contract basically controls 100 shares. So if you buy one contract at $7 per share, that's what, $700, right, per contract, right? Okay.
Mm-hmm.
So Emmett, you're making a huge bet.
Yeah.
Yeah. Um,
Yeah.
and but in some ways, it's still not like 50% of your portfolio, right?
No way. Yeah,
Yeah.
yeah. I mean, there's a lot of people that are, reach out to me on Twitter or ever since our last conversation, like, what option should I buy now? What should I do this? And I can't really give advice, all I can say is, like, be very careful with options and some people are real gamblers and want to put like, might want to put like half their money in this type of trade. That's crazy to me. That's really rolling the dice. If you see these opportunities and you put even like 5%, that's like, to me, is really risky. That's about what I did. And I feel like I'm a pretty risky person. So
Mm.
you have to be very careful with these types of trades when you kind of expect to lose it.
Yeah, I think also a lot of people with options, beginners, they tend to they get a little bit emotional in terms of how they view opportunity. They don't want to miss out. And they look at an opportunity that really isn't that special, like isn't really like once in a few year opportunity per se, but
Yeah,
in their mind, they're thinking it's a great opportunity, right? And they should risk 10 or 20% or 30% of their portfolio when in actuality, the odds aren't really that great, and
that's right.
but I mean, I think that's a tough thing to discern, like, hey, is this really an opportunity that's like really, really special, like unique, right? That I can go in bigger with. I think in your case, you had a lot of gains this past year. You have, a lot of, taxes to pay. So if you, lose out on a trade, you have some, it's not a complete 100%,
Yeah,
loss in that
yeah,
sense. So you do have some benefit. And then you're also playing with house money, kind of. I mean, in the sense that you've gained so much that,
yeah,
you're fine with losing a bit this year, to offset
yeah,
some of those gains.
yeah. No, absolutely. And I feel like, you know, a lot of people do fancy things with options. They buy call spreads or iron condors or, all kinds of fancy names of these different types of option spreads you can do. And sometimes I think the simplest, Occam's razor, right? The simplest is just to buy a call or buy a put for what you think is going to happen. It makes it simpler in your mind to kind of think about. You can, I think using options as a tool for me is most powerful when I think of it as a simple outcome like that, opposed to
Mm-hmm.
trying to make it more complicated.
Mm-hmm.
I'm
Yeah,
not saying doing those spreads aren't good. You can certainly do well, lock in profits with certain put spreads or vertical spreads or whatnot. But to me, I'd rather just buy and sell the stock than do that stuff.
sure.
Yeah,
Yeah, I mean, I think that matches also kind of your personality of kind of you're wanting to take some big risks and, option calls, make sense, especially when you think it's a special opportunity. I'm
yeah.
curious, why didn't you spread out your strike prices? Why did you go all like 700 strike January 15th, 2021? Why didn't you do like some 600, 650, 700, 750, 800, or, just like spread it out a
Yeah.
bit? Like, what's
I
the,
thought about doing
yeah,
that. It's a good question. And I asked the trader who's like been a market maker for, and for 10 or 20 years before he's been doing block trades for Interactive Brokers for the last 10 plus years, so he knows the options market better than anyone that I know. And so I had asked him, towards the end, like, should I have done this in multiple strikes instead of just all the 700 strike? He's like, no. He's like, if you had started putting fills in for, hundreds of contracts at different strikes, then the market makers on the other side get wind of that and they start raising implied volatility quickly because they think there's a really big buyer. So just doing the one strike is the way to do it if you're going to buy a lot of contracts. But try to hide your order as best you can. He did some kind of like fancy hidden midpoint orders or something. The best he knew how to do to get the fills
mhm,
without revealing the size.
got it. Yeah, interesting stuff. So, um, when you put on like this trade, are you like, are you prepared to lose the entire amount if
Yeah.
the trade goes against you, or do you have some type of stop loss some type of point where like I'll pull it at some certain point if it goes below this price or the options like sink half or 75%, I'm just going to
Yeah.
save some money, or are
Yeah.
you kind of like I'm just going to let it ride? What's your kind of approach?
Yeah, it's more the let it ride. I mean, I looked the couple of days after I did the trade, the rest of that day didn't go so well for me with the options. I think they went down to like $5 or something, even though I got filled around seven. But then the next couple of days, the stock went up and the options at the highest point were like 19. So I already like tripled my money in like 2 days. I could have pulled it, right? But in my mind, this is a trade for 20x plus, and so so I'm kind of waiting. The good stuff hasn't even happened yet in my mind, and the stock's come back down a little bit. The implied volatility came back down. I think it's like $11 or $12 a contract right now as of Friday, this close. Um, but in my mind, when I've done these types of trades in the past, occasionally, if it starts running up really fast, like faster than I anticipate, and it gets to like, a 10x plus return in a few weeks, then I might pull like a quarter of it just to keep my money, make my money back of what I invested plus some profits, and let this other 75% ride from there, because so I've done this type of trade in the past occasionally, like way back with Apple. I remember I did it, a much smaller scale, like for 5 or 10 contracts on my personal account at the time, and I made like 10x, and I was letting it ride. But then Apple corrected and went back down and ended up expiring worthless. And I was like, oh man, I could have just sold it the 10x. And so I remember those painful moments. And so if it does go up faster than I anticipate, I might close out like a quarter of it or up to half of it, but probably not even half, probably a quarter of it just to get some money off the table.
Yeah. Um, yeah, it's interesting. Like I remember the first day after S&P inclusion, I think Tuesday, the stock opened up around 455-ish, and then, it seemed like it could just go up, but then it just took the opposite move, right? It went down. I think it
Yeah.
closed under 440 or so. Um,
Yeah.
like your options, they probably looked like
It looked like
pretty,
sinker at that
yeah,
time.
they looked
Yeah.
pretty probably messed up. I mean, your $7 premiums down to 5 or maybe even less. I mean,
Yeah.
were you doubting? Like, were you kind of
No, I was not down. I
really?
was like, man, this is just the beginning. Like, there's a whole like month and a half left of buying that needs to happen. The index funds haven't even begun to buy yet. They have to wait until like December, I think, to start even buying. So it's just there's a lot of fun left in this trade in my mind, and so I'm excited to kind of see how it plays out.
Really? So what happened? Like, what would have happened if you're like, okay, the next day it goes lower, lower. We end this week.
I might have bought more. I had more. I
Really?
didn't buy as many as I really wanted to. I was tempted to buy, like the night when I went to sleep, I was going to buy 5,000 and I only bought 3,000. So I was like, man, if this price, I thought about it and I was like, if the price goes down a lot more the next few days, like before December, I'm going to buy like another one, maybe 1 or 2,000, like really cheap and
Got
see,
it. I see. So
but,
yeah,
but
you
I
might.
wouldn't have done more, because I don't want to lose
Sure.
or, a lot,
Yeah, yeah.
of
Um,
my,
yeah. So like, it's interesting because that first day, I would imagine like you probably could have lost up to $1 million. Like,
on paper. Yeah.
yeah,
Before closing if I closed it all out right then. Yeah.
exactly, right. But that's not phasing you, I guess, right?
It used to phase me, but now I have to think of it differently. Like, I have to think of it as a percentage of my account. Like in the
Got it.
past, it might have been $10,000 or $20,000 out of my $200,000 account I'd be losing, and that'd be, a little painful, but it's not the end of the world. Now I'm like, okay, I'm still losing 5 or 8% worst case. It's not the end of the world. And I have these taxes that'll
Yeah.
offset with it, which is it's like a perfect storm for me in a way. If I didn't have those taxes to offset it with, I might have just done it in my IRA account and just a small amount in my fund account, for example, just
Yeah.
because the IRA account, if it turns into like a 20 bagger, then I don't have to pay taxes on it, which
Hmm.
is great.
Yeah. Yeah. I noticed personally for me, it's um, like I'm kind of struggling through this one issue where um, I'm trying to look at things more in percent of my, account or portfolio type of net worth, type asset worth. But it's extremely difficult sometimes to do that because
Mm,
like, I'm like researching a new company or something or investment opportunity, and like the money I put in seems like a significant amount of money. Like, I'm like, wow, this is a lot of money. But then when I look at it like percentage wise, it's like it's not a lot. So I'm kind of
yeah.
like struggling in my own head where it's like I haven't fully transitioned to be able to invest just purely off of percent of my, net worth assets or portfolio. How did you make that jump? I'm just curious.
I haven't fully made it, to be honest. For this trade, I made that jump. It was a leap, and but for a lot of trades, I'm in the same boat as you. I think like, okay, and I don't do a whole lot of other trade. In my fund, I'm trying to diversify and do lots of different things and different names, which is good. And it's a good practice for me, and it's going pretty well. But my personal account and the IRA account, it's so highly concentrated Tesla. It's like I'm not ready to close my Tesla shares to like free up money for a new name or something like that. Um, so when I do trade other trades, it's often just a smaller amount because that's what's available to me, or I don't want to close a whole bunch of Tesla stock positions to
Hmm.
to put too much in something else.
Got it. If Tesla does do kind of this scenario of a super run up, will you sell like some or most of your, let's say, long-term kind of Tesla shares or your long-term dated, options?
Yeah, if it runs up that much, I've thought about it, and I'll probably just sell these short-term options, most of them. And if it's really high, maybe I can exercise some port, like 20% of them to just take shares and hold more shares long term, whatever, however high it goes, But I don't want to have a margin balance exercising too much of it, obviously. And I just realized like, okay, if it goes up that like as much as I think, I'm just going to resign myself to pay the all-in short-term gains tax with California and Fed and just pay it for this trade. But
Hmm.
I did a lot in my IRA account, and so that I won't have to pay that penalty there, obviously. So that's good.
Hmm. Got it. So you likely will keep most of your long-term holdings regardless, even if it runs up. Like
Yeah,
how
the
about if it
long-term
goes to
holdings.
how about if it
Yep.
goes to like 1,000? Will you still keep your long-term holdings? Just or
Yeah, no, I think I'm going to keep. I might sell a small portion, a tiny portion, just to pay whatever taxes I owe. That
yeah.
if I have to pay more taxes even after selling the short term for whatever reason. But other than that, I'm going to hold it and sell covered calls against it, like deep out of the money. Like if it goes to 1,000, I'll start selling like 2,000 or 1,500 or something over that, covered calls that are only like 2 weeks out for like $1 or
Hmm.
whatever, a couple dollars, just enough to like as a salary to myself
Hmm.
to live on
Yeah.
comfortably, while I figure out what I'm going to do next with
Hmm.
that.
Hmm. Got it. Um, yeah, just for okay, so we need to make a few kind of disclaimers or warnings. Like,
Yeah.
first, some of these things we're talking about, they're just like scenarios that by no means like are guaranteed or and I'll be clear, like this whole 20% of a possibility of Tesla, let's say, doing a super run up to 800 or more, to me, it seems a little bit high, that percent. Um,
Hmm. Hmm.
just because, like, I know Tesla is like, they do have, there's limited shares, and there's a ton of demand. But then on the flip side, I do think there's some liquidity. There's a decent amount of liquidity where, because it's such a big, large cap company, I don't think there's actually like a ton of diehard Tesla shareholders in terms of percent of the total float. Meaning,
Hmm.
like, I think because of the run up, and there's been so many new buyers and institutions and funds have gotten into Tesla, I feel like a lot of them would kind of maybe exit at a certain point. The hardcore kind of believers, like, I'm holding this to the end, like those are mostly, I think, retailers, and they don't make up a very large percent of the float. And then there are some institutions with those type of diehard believing believers, but I don't think there are that many actually. Like
Hmm.
even Kathy Wood's ARK Invest, they will sell as it goes up to keep their 10% or so holding. They're not
That's
really
true.
like the buy and hold forever types. And I
Hmm.
don't think there's that many of them actually. So I don't know. Personally, I think the 20% super run up scenario might be a little bit high. I don't know. This is
It could
my,
be, yeah,
yeah,
it
just
could
my
be it
personal
could be high,
opinion.
yeah. I mean, but the way the options were priced, it was like a 5% chance, and I was like,
Mm,
it's got to be higher than 5%. Like I think it's 20, 25, but maybe it is less than 20. And like I said, I could be wrong. This is kind of my own gut decision.
sure,
I've lost money many times on this type of trade in my
sure.
career, so it's very possible that I'm very wrong. Yeah.
Yeah. And another disclaimer or kind of warning for folks is um, that your trade, Emmett's trade, is there's a decent possibility he loses all of it. Like, if you
Yes.
don't sell at the right time. And the whole thing about time premium decay. So we have this thing is just like the S&P inclusion is just what, like a month out. And your January 15, 2020 calls are less than 2 months out. Trading days wise, it's like, less than that, less than 2 months, obviously, in trading days. So every day, every trading day that passes, because these are out of the money calls, you have a pretty massive premium decay. I mean,
Yeah.
imagine like a week later, okay, so your 700 strike calls are, let's say, about between 11 and $12 right now, right? So
Yeah.
let's say in a week, the stock price is the same exact stock price as it closed on Friday. So let's say 490, right? So
Yeah.
you have a week of time premium decay. Have you thought about like what the premium options will be at that time? Like, do you have any guess in terms of what it could
Yeah,
be?
I would guess it'll lose, $2 or $3 in value. I haven't looked at the actual th it's called the theta, the
Mm-hmm.
time value. But they have that stat on the Interactive Brokers platform, and I do look at it sometimes. But
Okay,
my guess is that it would be closer to $8 per contract if
got
the
it.
stock was the same. Maybe even less if implied volatility was taken out of the stock price too. That's another
Mm-hmm.
part of the stock
So, I mean,
option.
your bet only works if it really is moving up pretty
That's right.
fast. Like even if it moves
Yeah.
up slowly, it's still your
Yeah.
bet could be working against you.
Yeah.
You know,
It
say
could move up to 650 or $680, and then I could lose
exactly,
all of it still, right?
exactly,
So
yeah.
it's a very risky bet. Yeah, you're right. But also if it goes up to, it's because most of my own wet worth is in Tesla already, right? If it goes up to 600 or 650, then I've counteracted the loss with gains in the shares I own, in the long-term leaps that are deep in the money that I own.
Mhm, got it. And another kind of disclaimer warning. Just I think this is a great, like for me, I love just talking about this stuff because I could dive into, for example, your head, your thoughts. We can discuss the risks, but also the potential, outcomes, benefits, etc. Um, I think it could be helpful for other people just to kind of like think through, some possibilities, right? Another kind of, I guess, disclaimer or warning is your financial situation is probably different than a lot of others or most others, meaning like, sure, you could lose the entire $2.7 million that you put into this, but you've like already made 40 or 50 million, right, this past
Hmm.
year. And you've already diversified somewhat in terms of like you pulled money into 3 million into SpaceX, pulled money into a house,
Yeah.
etc. So your financial like situation, even if Tesla goes down to let's say $200 per share,
Yeah.
for some reason, and you lose all of this option trade and you lose like half of
It'd
or
be
more.
heartbreaking, but I'd still
Yeah.
survive. Yeah.
Yeah,
I'd still
exactly.
survive well. Yeah.
Yeah, so your financial situation is a little different, meaning like
Yeah.
the risks you're taking is not really changing like your immediate needs, or
Yeah.
financial needs. Like your family isn't going to change their standard of living per se
Yeah.
if like the trade or
Yeah.
something goes bad, right? I think
Yeah.
like for some people, like it's easy to do some option trade, some big risks where it does materially change, like um,
Hmm.
like how they live, right? And it
Yeah.
could be like a stressful situation, I think, for some people.
Yeah. And if you remember, I don't know, in our last conversation, we were talking about that, how I had a good job for a long time that I just resigned from a month ago. But up until then, it was a great job that paid very well and it had its own retirement plan. And so the money I was trading Tesla, doing these Tesla things with or strategies with, was like a complete separate pool of money that I knew I could lose and be perfectly fine, still work till and retire by the time I'm 50 or 60 with the other job. So this pool of money for this Tesla strategy stuff I'm doing has always been kind of compartmentalized as like house money, so to speak, right? That I could lose and still have a comfortable life with my full-time job and career I was working on.
Hmm. Got it. What do you say to like the idea of like, why don't you just stop uh, for a few years, just take it easy, cash out, and just kind of like you know reevaluate, just like some person might say, hey, just stop while you're ahead. What motivates you to continue to take big risks, right? And do you think that will stop at some time where you'll be like, hey, maybe I don't want to or I don't need to take as big risks?
Yeah, I like to I've always been so interested in the future and what the future holds, with technology in particular or emerging trends. What's the difference between a fad and is something a fad or is it a trend that's going to take off long term? So I've kind of been able to merge that fascination with investing, and it's paid good dividends this last, 10 years or so, especially. So I mean, I have this kind of skill set that seems to be doing well right now, and I've thought about it, and your exact question in this last year, I thought deeply about it. Like when I lost interest in starting a hedge fund and had enough money where I thought about just retiring and starting a restaurant, like a restaurant or a couple restaurants like keto-based restaurants or something, And I sort of almost went that direction, but I was like, I still think I can do this hedge fund thing, and I might regret not ever trying it. But then I, decided, okay, maybe if I can do it, I'll do it for good and do the charity aspect to it. And so that's where I have that hedge fund, and if this continues to go well, I'll get potentially some big investors into that fund and have half the fees go to charity and maybe set some kind of example for other investment managers to do something similar and maybe kick off a whole new trend like ESG. And even if my fund fails later, at least I might have kicked off some trend like ESG, but for charitable giving, which would be great, since capitalism is sort of, I see that it's sort of at risk with the younger generations, the
Mm-hmm.
whole idea of capitalism. But maybe this can help change that perception potentially
Mm-hmm. Yeah,
if it
got it.
took off, best case. So that's sort of what drives me to keep doing it is deep down, I want to change, the road ahead for uh, our economic system to not be socialist, but to be more capitalist, but with, common sense involved, obviously, and good giving back.
Mm-hmm. All right. Um, all right, makes sense. Last kind of warning for folks is please do not do what Emmett does just
Yeah.
because you are highly impressionable and you don't know what you're doing and you just like want to follow. Um, what
Yeah.
would you suggest to people who are like they listen to something like this or your first interview with me and they're like, wow, where do I get started? Like
Yeah.
maybe they're a little bit more cautious. Let's say you're talking to more level-headed people who are like, this sounds interesting. Um, and I don't want to just go ahead and just randomly gamble all my savings away. But um, is there a way to kind of, dip my toes or, get some
Hmm.
learning under my belt? What would you say to those folks?
Yeah, so it's funny you say that since our last conversation and even this last couple months since I retired, since I left my job and talked to friends and family that I left or they found out about it, a lot of people are saying, "Oh, I want to invest in your fund, and this and that." I definitely do not want to take like individual investors' capital in this type of strategy. It's very high risk, right? And so for all these people, I tell them like, listen, my highest conviction name by far is Tesla, and I don't see that changing anytime soon. If you're committed to long term, just buy and hold Tesla. That's what I would say. Not all your money, but that could be a high weighting of your portfolio, in my opinion, if you want good returns for years to come. So that's kind of what I tell people as a safe thing. And I also tell people the most successful investors I've seen, like I've seen so many different investment strategies in my job being in sales for all kinds of hedge funds, all different types of strategies they tell me about they're doing and such. And most people's strategies do not beat the market, and a lot of them lose a lot of money over the long term. But the most successful ones are are buy and hold investors. That's sometimes the hardest thing to do is if you buy Tesla and you just have to sit on it throughout all of all. When it goes up $1,000 or $500, like, oh, what should I do now? What should I do? I want to sell it or no, just hold it. Like, or if it goes down $200, what should I do? What should I, just hold it? Long term, it's going to be fine. The people that try to actively trade typically lose a lot of money in the long run, and it's addictive because if you do it a few times, you make a little bit of money. It seems like, oh, I can keep doing that, and you feel like you need to do something when the markets are moving, or But the hardest thing sometimes is just sitting and not doing anything,
Hmm.
and just stay invested in your beliefs with the companies you're invested in.
Yeah, yeah, that's yeah, definitely interesting. Yeah, I think like there are definitely like different paths to choose, and I would say like in some ways like not one path is better than the other. Like a lot of it depends on the person, the personality, their skills and abilities. Um, like you're choosing and have found success in a little bit more kind of like you combine a long-term investing approach because you've most of your portfolio is still in Tesla long-term
Long term,
shares and
yeah.
long-term dated in the money, right? Deep in the
Hmm.
money calls. And so
Yeah.
you pair that together with kind of these more high risk, big, big risk, big reward type of opportunities, right?
Hmm.
And that kind of matches your personality set and kind of you're able to handle the emotional ups and downs. I think most people when they make the trade like you did on Tuesday morning, putting 2.7 million you drop 1 million or something, right? Like I
Hmm.
don't know how most people would handle that, you know?
Yeah.
It's just
Yeah.
emotionally and psychologically you're just like, "Oh my gosh, I made this huge mistake." I guess it helps by saying, "Hey, it's just a few percent, right? Five, like,
Yeah.
um, actually, it was more than five
Yeah.
percent, so 5 to 10%. Actually, that's a decent
Yeah, it was
amount,
like
actually.
7 or 8%. Yeah, it was a good amount. Yeah. I mean, I just felt like this was the last big gift in my mind. It felt like a gift, but I know I'm just overly zealous on Tesla's in this potential scenario. But something just told me like this could be your last big opportunity for a huge win. Tesla's already so big, it's not going to 10x in price anytime soon. It
Yeah.
might double, and this could double in a month, and
Hmm.
this could be the window.
Yeah.
So in order to take advantage, do this option trade. That's sort of what I was thinking.
Yeah. Another thing, Emmett, your thoughts and your actions could change day to day, right? So who knows what will happen? It could be like this week you cash out for some reason. So
That's true.
yeah, so in this sense, everything that I share on my channel is more of a stream of consciousness. It's real time thoughts that change day
Yeah.
to day in situations. So don't take what Emmett says here as like this, ultimate truth of how to trade or invest over the next
Yeah,
month.
this is
This
not
is all
investment
changing.
advice in any
Exactly.
way. It's just everyone should come up with their own models of trading and decide for themselves. This is just my experience of what
Exactly.
I've done. These options trades are especially risky because if the entire stock market's, going through some correction, then all these bullish call bets I'm making, anytime you have this type of trade on, you're probably going to lose it all, right? So if in the next, luckily this is a shorter term one, but if it was a longer term out of the money, deep out of the money call option, especially, then if all of a sudden we go into some kind of scare where the market's tanking 10 or 20% for whatever reason, then your call op, pretty much all stocks are going down, including Tesla, and your call options are much more likely to become worthless. So yeah, it depends. A lot of these option trades, like the one we talked about, is dependent on the market staying stable or continuing to go up for the next 1 or 2 months too, which is another, you know, factor to think about.
Yeah, I want to actually just talk to you about risk a little bit, especially with macro events. And I think a lot of people they kind of discount the possibility that macro conditions can suddenly change, and they kind of like, I think especially new investors tend to be overly optimistic in terms of the predictability of the markets, or kind of this whole idea that everything goes up and keeps on going up. The fear of missing out, right? Just kind of being emotional and
Hmm.
scared to not be part of it. But I think uh, and I think it goes two ways. So one, if you're doing the short term options, you're especially vulnerable to unexpected events, right?
Hmm.
Because if something happens, like there's an event in the world, or it doesn't even have to be an event. It could be like a coordinated media campaign, on some issue or
Yeah.
something that kind of like messes, the bigger kind of
Yeah.
optimism in the market for a few weeks or a few
Or it
months,
could
right?
be like Jerome Powell, the Fed chair, just saying something about like signaling something that's interpreted as interest rates not staying this low for that long. Yeah.
Exactly, right. Yeah, just like some small thing and it just triggers these like whole series of different, people making different comments and changes the whole mood of the whole, stock market or in these investors. And then you have like, it could be a few months, it could be drawn out, some type of bear market or correction. And if you're in short-term options, then it's like, wow, you just like, I mean,
Yeah, just
paying.
bombed and lost it all. Yeah, if
Yeah,
you're
yeah,
short-term call options. If you're short-term put options, then maybe you just made money. But
yeah, yeah,
most of your listeners are probably not buying put options on stuff.
yeah.
Maybe some.
Yeah. And so, I mean, that's definitely a concern. Another concern that I think, even with holding long term, I think, you know, there's this huge argument that you have low interest rates. You don't have a lot of other options with investments. Equities are kind of like the go to place. Um, you have COVID, and a lot of these stocks and companies have weathered the storm, proven their resilience. So you have a lot of just buy in from the whole market on the potential of these companies and the valuation of these companies, which have gone up and skyrocketed for some companies. And you don't think that things could change. You think that this is all set and solid. But when I hear that, often sometimes, like, because I hear, like, I watch some stuff, I read some stuff, and they're like, yeah, this is going to go on for many, many years, right? Low interest rates and just high valuations. And
Yeah.
you could say, like, hey, yeah, if the interest rate of like 1 or 2%, like, look at the multiples investors will have to give. You have to give higher multiples, right? Because the interest rates are lower. Um, and I look at that and I look at it less binary, because I think a lot of people, they look at it black and white. It's either going to be like this or not. I look at it more blended, or kind of it's like all about probabilities, like nothing is 100% about the
Hmm.
future. And
Hmm.
oftentimes when people talk like it's 100%, it's really not 100%. Like it's actually higher risk than they make it to be. And that's where, I think um, it's something to consider. It's difficult to plan for though, because you don't want to be
Hmm.
scared completely out of the market, where you're like, oh
Hmm.
my gosh, like everything's so high that I'm not going to invest. But on the other hand, you don't want to have this overinflated enthusiasm and overconfidence that everything is just like,
Yeah.
gonna
Especially
stay
on
high.
like growth stocks, like, all these stocks that are going, and, including Tesla, obviously, but, all these other internet software as a service company stocks that are just going up ridiculously. Like I agree that something can change on the macro environment to cut them all in half pretty quickly and then stay there. We just don't know when that'll happen. It'll happen at some point, but we don't know when. It could be at the end of the decade. It could be this year, next year. You just don't know when, but at some point there's going to be some major kind of correction, and it might go up another factor of multiples to even higher before that happens. I don't know, but it could happen tomorrow too.
Yeah, I mean, the way I look at it is like if you're invested in a company that you really know well and you really think is like revolutionary, growing into huge markets and still early on, then you
Yeah.
can count on that counteracting kind of like the
Yeah,
volatility and let's say even a prolonged, bear market or something. Like you're betting more on what a company can do regardless of the macro environment. Like to me that it
that's
feels like a
right.
little bit more of a solid bet than like
Yeah.
betting on the entire market or companies that you don't really know about that much, and you just hear about from other people.
Yeah, no, that's why I think me and you, and I think most smart investors, as bullish investors on Tesla, for example, are holding most of our shares most of our Tesla exposure and just shares held long term, right? Because in if there's huge market volatility swings, then the options could be turned to nothing, but your stock still means something, right? Because theoretically the value of the stock should be the value of all the dividends it gives out in the future discounted back to present day. So I think you and I both believe that Tesla is going to grow to a point where it can start giving dividends and eventually immense dividends relative to the size of its business now. And so if we just can hold on to it until then, we're going to be made, men getting huge dividend checks from Tesla, similar to how people are getting big dividend checks from Apple now that bought it 15 years ago and held, right?
I'll go ahead and link to Emmett's Twitter account in the video description. He's been tweeting out some pretty interesting stuff that I've been following as well. And also your fund site as well. It's Good Soil Investments, right?
Goodsoilinvestment.com.
Okay.
I think it's without the S. Yeah, goodsoilinvestment.com. Yeah.
All right. All right. Good
Yeah.
luck, man. And
All
yeah,
right.
we'll chat and talk to you later.
Thanks. Thanks, Dave. Okay.
All right.
Talk to you
Okay.
later.
Bye. All right, I hope that conversation was helpful. As with all of my videos, it's a stream of consciousness where I'm sharing my thoughts and also I'm trying to get into the minds of some other people that I interview. And I hope that going into some of the reasonings and some of the logic behind some of their decisions is helpful. I know it was very helpful for me. If this video has been helpful, please like it and consider subscribing to my channel. I've got some great interviews ahead, and I've also got some great company analysis videos planned in the coming weeks. All my YouTube videos are also available as an audio podcast. Just search for Dave Lee on investing in your favorite podcast player. And I'm also on Twitter where I'm actively engaging with people there, and my handle is HeyDave7. We'll see you in my next video. Thanks.